So we have started. Good morning, everyone. My name is Niyo Dewale. I'm the coordinator of this webinar for ICANN Western Zone, Webinar 2 2024, and I will be moderating today's section. I'm the managing partner of Active Option Consulting that partner with ICANN Western Zone to bring up this webinar. Some of you are aware of what I'm saying. So in order not to take much of our time, while some people are just joining us, let's move on. Today, like we have advertised that we are having 2-day training on Ipsas, that's International Public Accounting Sector Standard. Today, which is 28th of June, and tomorrow, 29th of June. This is titled as Ipsas Unleashed, Insight for Successful Public Finance Reporting. And our today, which is day one, will look as this. We're having the opening session, which I'm currently doing. Thereafter, we'll go for the national anthem, then the ICANN anthem. Then there will be an address, the opening address by the zonal chairman, who will declare the webinar open so that we can move ahead. Then the whole training workshop for the 2-day is divided into 5 modules. The first 3 modules will be taken by our professional colleague, senior professional colleague, Mr. Francis Adaramola, MSc, FCA, Ondo State Auditor General for Local Government. Is now retired, but Daddy is not tired. He's still very available to share his wealth of experience. And by the time he starts, you will usually share your view that our erudite scholar is not tired. Then, like I said, that the module are 3 modules. The first module, which you must have all seen while you are doing your registration. The first one will be on assets, which Ipsas has shown on the screen. The second one will be for module 2, liability. Then the third one will be a kind of how the financial statement is being presented and a case study to work out how it's going to be. So that's how we are going to roll for today. Tomorrow we will have module 4 and module 5 together. So if there's any other information, I will be relating that to us. But I just want to enjoy us as we are starting, for us to, it's like we're in a class, although it's a virtual class. Let's ensure that we mute our microphone so that background noise will not disturb the section. So we are taking off immediately. We'll start with the national anthem. Nigeria, we have changed the national anthem recently, so we'll get the national anthem in a few minutes now. Just bear with me, okay? So
Yes, sir. Okay. This one. Yeah.
Nigeria may be there. Yeah, thank you. Thank you. So we go for the national, no, the icon anthem. Icon anthem. Just a minute.
This one
Yes. Just 1 minute, I will put it on now. So icon anthem now. Okay. Just 1 minute. I don't know what's happening. Let me try to sort it out. You know, at times all these things. Okay. All right. It will work now. So I'm trying to, I don't, okay. I've seen it now. It will come up now.
Bless God, I can fount of treasure in triumph of an race, standing stronger in harmony, building a land together. Dreams of a founding fathers, we are striving to attain all common values that we share. Through all ages we sustain. Institute of Chartered Accountants of Nigeria. No like and no like and your accuracy we cherish. We uphold your integrity.
All right. Thank you, everyone. The next on the item is the opening speech by the zonal chairman and declaration of the seminar opened by him. I've been reliably informed this morning that the zonal chairman is on an official assignment to one of the districts within the zone, for their investiture. So he has therefore made a provision by one of the ESCO member in person of the Zonal Technical Secretary, Mr. Olugbenga Solare, who is also the chairman of ICAM Mowe and District Society. So permit me, ladies and gentlemen, to invite Mr. Gbenga Solare, FCA, to present the zonal chairman, Honorable Idowu Otetubi, opening speech for this webinar. Mr. Gbenga Solare, please.
Okay, thank you, sir, Mr. Odewale, the moderator and the coordinator of this webinar. But quickly, point of correction, I'm the zonal publicity secretary.
Oh, I'm sorry.
Okay, without wasting much of our time, I will quickly take the opening remark. Yeah, good morning, esteemed professionals, dignitaries, fellow members of the Institute of Chartered Accountants of Nigeria, ICAN, Western Zone, and other participants across the whole world. It is my pleasure to welcome you all to this webinar as we gather to share knowledge, ideas, and insights on Ipsas Unleashed, Insights for Successful Public Finance Reporting. As the Western Zone Chairman, I am delighted to declare this webinar open. And I trust that the next 2 days will be filled with enriching discussions, valuable takeaways, and meaningful connections. Before we dive into the program, I would like to express my gratitude to our speakers, panelists, and organizers for their tireless effort in putting this event together. The resource persons, my digital chairman, Mr. Kutude Omomofe, FCA, Mr. Adaramola, FCA, the highly experienced immediate past Auditor General for local government of Ondo State, and our highly cerebral, Mr. David Olijogun, FCA, who has been carefully selected, will definitely do justice to the topics. Let us all embrace this opportunity to learn, grow, and network. Thank you, and let the webinar begin. Honorable Idowu Otetubi, FCA, Western Zone Chairman of ICAN and Chairman of Akure and District Society, 28 June 2024. Thank you.
Okay, thank you so much for giving us the zonal chairman presentation. Thank you. God bless you. So let's keep the ball rolling. Mr. Olushola Daramola is need no introduction when it comes to public sector accounting. I could remember sometime in 2019, before COVID came in, when we started the Western Zone webinar and Western Zone seminar, MCPD. Mr. Daramola was one of the first set of resource persons that take us through during this time then. Then it was physical. We had it in Lagos, we had it in Ibadan. By the time we wanted to have it in Akure, COVID came in, so we couldn't do it. Now, we now transited to virtual program, of which he actually participated as well. If it were to be physical, I believe you really enjoy him because a lot of humor is added to his presentation. So let me just brief it this way. Our own revered professional senior colleagues, Mr. Olushola Daramola, FCA, is an alumnus of University of Lagos, where he had his first and second degree. And he has attended other universities as well, and I've attended series of seminar conferences for accounting, public sector in particular, in and outside the country. And just recently, not quite long, having assumed more than a decade the position of Auditor General for local government in Ondo State, is now retired, but not tired, because what is upstairs is still there. So, ladies and gentlemen, let me at this junction bring on board our paper presenter for Module 1 and 3 for this session of Ipsas, Mr. Olushola Adaramola, FCA, all the way from Ondo State in Akure. You are welcome, sir.
Good morning once again. Let me thank you for the brief introduction. And let me welcome our participants to this seminar on international public sector accounting standards. There is no gainsaying the fact that you will enjoy the lecture. In fact, it has become a part and parcel of me. And if you have your question, you are free to ask your question at any point in time. And if you need my number, I will give you my number in case you run into a problem when you are practicing and you want to ask any question about it. Well, as the moderator have said, I am a retired Auditor General for local government. It means I must have practiced public sector accounting for nothing less than 30 years before I retired. So everything about public sector, the genesis, up to the time of Ipsas, I think I'm aware. Once again, I welcome everybody to this seminar. International Public Sector Accounting Standard, otherwise known as Ipsas, was introduced in 2014. But prior to that time, 2010, they started dragging the issue that there is a need to change from the standardization of accounting standard that was introduced in 2003 to a more comparable financial statement for public sectors. What do we mean by public sector? I know the participants, they know public sector. Public sector, they are the government sector of the economy, the governmental sector of the economy, divided into three: the federal, the state, and the local government, including the parastatals of the three basic tiers of government. So how do they prepare their own so that the account can be comparable? And let me mention this: the major reason for the introduction of Ipsas is the principle of comparability, so that the account can be comparable. So in 2003, they changed from the traditional method of preparing the account to standardization. They referred to it as standardization of federal, state, and local government accounts. That was the genesis of Ipsas anyway. They were looking for ways in which the account of the federal, the state, and that of the local government can be prepared in the same manner, so that this thing can be, this financial statement can be comparable. Despite that fact, there were some flaws and challenges of the standardization method, which made the board, the accounting board, to introduce International Public Sector Accounting Standard in 2010. 2010 to be precise. So the principles were in place. It is just an adaptation of IFRS, which is purposely for the private sector, an adaptation of IFRS to the public sector. So it is not that Ipsas is from heaven. It's not. It's just what are the key standards from the IFRS that are suitable for the public sector. And these were extracted and they adapted it to the public sector. And they give the name International Public Sector Accounting Standard. With the word international, it then means that it is not only being practiced in Nigeria, it is practiced globally. So before, that is one of the change, the difference between the standardization, because that one is just standardization of federal, state, and local government. But this one is international. So which means that the system we are using here in Nigeria should be the same with the system that they are using in Ghana, that of America, Britain, Canada, to mention but few. So they refer to it as International Public Sector Accounting Standards. Initially, they divided it into two. They divided it into two, Ipsas cash and Ipsas accrual. Because of the movement, you know, let me say this, we in the public sector, we relax so much. We relax so much. Why the relaxation? Is just because either we like it or not, after 3 years, we are promoted. These are not done in the private, it is not done in the private sector. If you don't know what you are doing in the private sector, you are gone. Promotion is not automatic at the private sector. But in the public sector, after 3 years, you are promoted. After 3 years, you are promoted. So everybody relax. It is not that the institution they attended at the private sector is different from that we in the public sector that we attended. I do ask a question, even from my colleagues. If it is physical, I will ask you a question. Those of you in the public sector, if you have an opportunity to go to a private sector, oil company, CBN, even tax or whatever, won't you go? Everybody will answer, would love to go there to work. But all these small by small method in the public sector, the private sector cannot accept it. So the introduction was in piecemeal. First of all, Ipsas cash. That one was meant for the preparation of accounts in the year 2014 and that of the year 2015. So in 2016, accrual was introduced, and then we came into Ipsas accrual. It is saddening that up till now, not all the public sector in Nigeria still adopt Ipsas accrual. Because of what? Because they will tell you no person. I don't believe that anyway. No personnel, nothing like it, just because either we like it or not, after 3 years we are promoted. If it is based on, if you don't prepare your account using Ipsas accrual, you are not going to be promoted. Our people will do it. Not until we are forced. Don't forget theory S and Y in management when we are in the university. So theory-wise, unless you push them, unless you force them, they won't do it. So unless if we are forced, we will do it. But that is not even the way today. So they introduce it. But let me just tell you, what is the major reason? As I said here, as I mentioned, the major reason behind the standardization is this comparability, so that we'll be able to compare the accounts of both federal, state, and local government. From one local government to the other, you can compare, because each item now speaks the same dialect. Each item, when you say social benefit here, it's going to be social benefit there. When you say it's social contribution, it's going to be social contribution there. When you say it's overhead, it's going to be overhead there. When you say it's allowance, it's going to be allowance there. Not that an item in my own allowance is taken to your own social contribution. No, 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 no. So we can see the figure. And again, we can compare the account of federal government with that of the state. We can compare that of the state with that of the federal and that of the local government and that local government with the federal. Not only that, you can compare the financial statement of any country with each other. You can place the account of Nigeria with that of America. Although there is the issue of hyperinflationary economy, Ipsas 10. When we get there, we'll talk a little about it because of our time. We'll talk just a little about it. You can compare like that. With Ipsas also, don't forget I said, Ipsas was adopted. It's an adaptation of the IFRS. It now means that the financial statements of the private sector and that of the public sector, they are similar. So it is now possible to bring the account of the private sector organization side by side with that of the public sector and compare. We can compare the account of Ondo State government with that of Guinness Nigeria PLC. They speak the same language and know which of them are performing. So let us look at why introduction of Ipsas, the advantages. The advantages, because of our time. Advantages of Ipsas, talk about compare, it makes it possible to compare the account. Then it is easy to prepare. Very, very easy to prepare the account. Because, in fact, that is the method for example, the Accra method is the method we are used to right from the schools. We are used to it. So it doesn't mean that, you are from Unilag, I am from Osman Danfodio. The method is different from, no. It's the same. So for you to get into it and get used to it almost immediately is very possible and very easy. At the same time, another great opportunity for this is that it makes the government establishment to account for the money at their disposal. Don't forget the cash basis of accounting. All the expenditure in a year are written off at the end of that year. So you don't know. It then means that even all capital expenditure, they are being expensed at the end of the year. You just write them off at the end of the year. Then that one can lead to corruption. Be it as it may, with Ipsas, with the introduction of Ipsas, you prepare the statement of financial position, whereby you have your asset and your liability. At the same time, there is continuity in the statement of account. Not that you write it off at the end of the year. The balances are now being brought down. You continue from where you stop at the end of the year because of Ipsas accrual. Yes, with Ipsas, it's make it possible to know who to blame in the financial statement. Who to blame. I am saying this is another language from what is written down. This is what I mean. Before the introduction of Ipsas, federal government will tell you the local government are not performing. The chairman of local government They just chop money. What they supposed to chop their money or something like that. But let me ask you, and let me tell you that with the introduction of Ipsas, that noise has gone down. Why? Let us take the financial statement of Nigeria for last year and pick the financial statement of any local government. The National Chart of Accounts says that Head 1 is for the presidency, is equally for the chairman. So everything that we have in Head 1, the Chart of Accounts 1, is going to be for the president at the federal level, is equally for the chairman at the local government level. Now let us look at it. Out of the total budget of the local government, what is goes to the president and what percentage goes to the chairman, you will know that that noise, they should stop the noise. And definitely, since the introduction of Ipsas, it has quenched the noise that, oh, the state government, they take away the money or whatever. The noise we are not having is that the governor of each state does not allow the money to get to the local government. And that one also is one of the advantages of the local of Ipsas, because with that, Ipsas says money released from the federal level, from the FAC, should be traceable to the account of the government. So any amount released from federation account should be traceable to local government, to the state government. But how much every year now, when I was in the office, how much did Ondo State local government received from the federation account? How much did Ondo State local government actually received from DAC? This thing, we compare them, is as a result of Ipsas. And when you jeopardize the two, you will find out that, oh, something is happening on the road. Somebody is crossing somebody's account. So one way or the other. So it's one of the advantages of Ipsas. With Ipsas, Ipsas gives every tiers of account the fundamental right to account for their own income and expenditure. You account for it. Not that somebody is in charge, another person is.
Hello, sir. It's like we are not hearing you again. No.
Eh?
Okay, you can hear you now. Go on.
Okay. It's because of internet network.
Yes.
So
yes.
sorry. What
No
I'm
problem,
saying is that on and on like that is basically for the principle of comparability. It is very, very significant for the improvement of the quality of the general purpose financial reporting. It gives quality to it. Before I left office, my financial statement, my financial report for 2022 was about 800 pages. Unlike that, the former one that does have about 60, 70 pages were done. Because everything you must account for it. It's one of the advantages of Ipsas. Then, the users of accounts, the financial statement under Ipsas is so defined in such a way that the users of the account, you don't need any interpreter to interpret the financial statement to you. It means that financial statement is self-explanatory. When you see this financial statement, you can go there and pick what you need with fiscal of each tiers of government to be publicized. So if you are preparing your account now, within today, and today will be the last day because today is the last working day in the month of June. Today now, the financial statement of all the tiers of government in Nigeria must be on internet, at least. If you are not there, it means you are late. That is, what I mean is that not ordinary preparation or detailed financial statement must be on the internet as at the close of work today. If it is not there, you are late. And internationally, we are being monitored to do all this. These and many more are the advantages of these Ipsas. As we go on, I'll be telling you, revealing more to you about these advantages and disadvantages. Where we are going to see much. Let us look at disadvantages. Because as I said, people find it because we are the public sector, people find it very difficult to go in line with Ipsas. Because we are the public sector, we have the problem of personnel. Just very few people know it. I don't know whether they don't want to know it. It is not difficult. If you put them into the private sector, they will understand it. But because it's a public sector, and if you want to do anything to them, they will go and bring senator. They will go and bring their House of Rep member. There is nothing you can do. So, very few, in all the MDAs, very few people know this thing. A very good disadvantage of this Ipsas is valuation of asset. The problem is valuation of asset. You will agree with me that there are some assets that has been in existence more than 100 years. Here in Akure, we have some assets there together that belongs to government. That has been there even before the creation of Ondo Province. They are there, most especially buildings. The cost of this building is no longer relevant in today's cost. So what is going to be the cost of such building? Let me say this. Let me use a general one. In the by Baba Awolowo, then that secretariat used by Baba Awolowo. How much was Baba Awolowo used to construct that building then? Are you still going to, because of historical method, are you still going to recognize it as that method? And even if you now go to value, what is going to be the value you are going to give it? Are you going to give it the value of today? Compare it with the value of today. I can assure you, even the so-called of today's concrete nail, go and nail it to the wall, it won't enter. Yes, today's building that they are just constructing, even if you see people like Anthony Joshua that can bust very well, if he busts the wall will scatter. Yes, we have the lifespan of every building to be 100 years. This building, they have lasted for more than 100 years. Yet, they look more solid. than the current one. What is going to be the value that we are going to give to it? Let me cite an example. When we go to Badagry, our first Aso Rock in Nigeria, what do I mean by Aso Rock? Because of those people from the international participants. The government, the federal government house, the first one in Nigeria that Lord Lugard used in 1914 during amalgamation, that building is in Badagry today. The building is used for the housing of slave trade antiquities. Even if you get there today now, the building must have yielded some amount to the purse of government. So a building that is bringing in income, we cannot say the value is 0 or the value is 10 naira. If you get there, the ceiling, what do you call it? The concrete was used by, was done by with planks. But the planks of those, even the staircase was planked. It's planked. If the planks that was used then is even better than our concrete of today, because the planks no diminished at all. This plank is still there, very solid. I was there to see things for myself. What is going to be the value of that building? Or are we saying the government is no longer the owner of that building? Or are we saying we are not going to allot costs to a building that is bringing in income to government? What of the point of no return? What is going to be the cost at Badagry? There is a point there known as point of no return, where slaves got to in those days that they could no longer go back home. You see that they left that place for the foreign land or they are dead. It's known as a point of no return. People still visit that place up to today as a tourist center, and they paid. So what is going to be the cost? The federal government is not doing anything. When you look at the accounts of the federation now, let them come and tell me the cost of that building and even the place, what do you call it? Our first story, the first Aso Rock in Nigeria. What of the first story building? The first story building is equally in Badagry. Is there. So what is going to be the cost? People are not interested. Even how do you value all these assets? What value are you going to give to it? We all know that is one of the problems also. What value are you going to give to it? When you want to value, you engage the services of the valuers. Yes. You engage the services of the valuer. What is going to be the return of the valuers? This is what I mean. How much is the valuer going to collect from the government? We all know the professional fee, 10%. What is that government? Where is that government in Nigeria that is ready to pay the 10% of the value of the asset? What is the value of the asset of the federal government loan in Nigeria? Even that of the local government is running to billions. Where can that local government get hundreds of millions to pay as cost of valuation? They will tell you, we have more projects where to spend the money. That is why Ipsas is still a major, is still hanging in Nigeria up to today. The value given to this, where do they get it? Where do they get the value given to all these projects? And again, let me say that there are some assets. You in Nigeria, you will agree with me, most especially people working at the public sector, you will agree with me that there are some assets of government that government assets cannot even trace. They don't know where it is again. For example, I'm from one local government or the other. If I'm in that local government today, if their vehicle develop any problem, I will take it to mechanic. And if the local government is not having sufficient fund, I start immediately. I leave it there. If posting come, and then they post me away, I will leave the what do you call it? The asset there and go. The person coming may not even know the history of where the asset is, and so on and so forth like that until they forget the asset there. But some of the assets of government are vehicles, but let me use the word vehicles. Some of the vehicles are the mechanical workshops of roadside mechanics outside. And even some of them, they have turned into store where they store their spare parts. What do? After sometimes, if you get there, you need some part, they will get there, they remove it. They attach it to your own, you go. So that one becomes almost a carcass. What do? You cannot even trace it. After sometimes when you get there, it is what you see, that government property is no man's property. That is one of our problems, the problem of Ipsas. Government property is no man's property. You can see our people. If they will buy Tokumbo car and cover it at home. Official car is a brand new car. They'll be using that official car to pack cement and firewood because it is not theirs. Because they will be in office for 3-4 years. After 4 years, they collect the vehicle back from them. So they must destroy that vehicle before they collect it back from them. What are we saying? When they are going after the 4 years, even some of them, if you are still having a very good tire, you remove the tire, you put it in your own. All this system giving us problems, giving Ipsas problem. Because the vehicle you are removing its parts, past book value. The moment you remove its part and replace it with carcass, the value cannot remain the same again. It cannot remain the same again. And I want to say that we don't even we have forgotten some as government property. During the time of Baba Awolowo, when he was still the premier of Western region, there are some people, we call them road maker. Road maker. Those people, they were in charge of cutting road badges, clearing the road, filling potholes, and so on and so forth. Immediately after that government, the buildings are still, Baba Awolowo built some buildings for them, very small building. It may be about 6, 7, 8, 10 rooms for them. Long building attached together along the road. For those of you participants that knows Ondo State very well, at Oboto, you will see this building there. It's there. At Akure here, after Igoba, before it's in Igbo, you will see this building there. The building is there. Just a single building along the road. And so on and so forth like that. They are there. At Ijebu. Yes. Ikiru. I saw them. Then the point now is that who is the owner of that building? The villagers have taken over.
Hello, we lost your network. Yeah, I think the network has taken. Mr. Olushola?
Yes.
Okay.
And with you?
Yeah,
this network around this
I
place.
know, I understand. We couldn't see you. You can just continue. I think you're on to the next.
Are you hearing me? Hello?
Yeah, we can hear you. I have a copy of your something here. I think we are on to the.
Are you hearing me?
Yes, we can hear you. I can hear you.
Hello?
Yes, can you hear me too? Hello, sir. Okay, you. Let me ask you to unmute. You've muted yourself. Just unmute and continue. I think we're on the number of Ipsas that we have. We should be on this. Let me see if I can open it. Lushala. Oh, it's been logged out. Okay, it's back now. Hello? Hello?
Hello?
Yes, you are back now.
Hello?
Hello, we can hear you. Can you hear me?
Hello, are you with me?
Yes, we can hear you. Can you
You
hear
are
me?
with me now.
Yes, we are with you. I think.
Yes, I can hear you.
Yes. It's only that.
Okay.
Yes. I think we should be on the available standard now.
This thing is, we're having breaking voices. I'm just hearing breaking voices from you.
It's okay now. I can hear you. Can you hear me now? I can hear you clearly.
No problem.
Hello, I can hear you.
Okay, thank you very much.
So
I was trying to say about the valuation of assets, even a loss of some assets. That we have some assets that are no longer traceable.
Okay.
Yes, even plantations. Some of the plantations planted by Baba Awolowo in 1959, 1957, 58, 59, within Ijebu and Ondo State. Some of these have been taken over by private individuals because nobody comes there to look at this plantation. And this to some all over like that. So we are having more problem. We don't need to of Ipsas. Don't let us waste more problem on Ipsas. And let me tell you that, let's go to that Ipsas per se.
Okay.
Ipsas, International Public Accounting Standards.
The standards.
There are numerous accounting standards being released by Ipsas board. We have a board in charge of Ipsas that releases these Ipsas. What is the method? Before they release the Ipsas, they first of all put it forward as exposure drafts. They put it forward as exposure draft for criticism, plus or minus. And after much deliberation, they will release it. As of today, today is the 28th day of June, 2024. As of today, we are having 49 standards. 49 standards. But not all the standards are being put into use. The last 5 from Ipsas 45, 46, 47, 48, and 49, they have been released as standards, but they are not yet effective. Like 45 and 46 will be effective as from January 1, 2025. Why Ipsas 47, 48, and 49 will be effective as from January 1, 2026. But be it as it may, because this is ICANN, we must tell you the latest. And we are having exposure draft up to exposure draft 80. We are having 80. So like exposure draft 50 now is on investment in associate companies and joint ventures. So we have them. So we are having 49 up to date that we want to briefly look at before we talk about the financial statement itself. So we are having 49. Ipsas 1 is on presentation of financial statements. Ipsas 2 is on cash flow statements. Ipsas 3 is information
Hello, maybe you stop sharing from your own end. I don't know why is it like this, but you can continue anyway.
Okay.
Uh,
Where was the junction that we missed each other? And let's start the Ipsas again. Hello.
Hello, we can hear you.
Okay.
Maybe at a time when you keep talking, David can still share it, but I will try to get it from my own end. Maybe I will be sharing it here.
Okay. Ipsas 1, presentation of financial statement. Ipsas 2, cash flow statement. Ipsas 3, foreign exchange transactions. Ipsas 4, Ipsas 3, that is net surplus or deficit in the financial statement. Ipsas 3, net surplus or deficit in the financial statement. Errors in financial statement, accounting standards and policy. That is accounting concept and conventions. Then Ipsas 4 is foreign exchange transaction. Ipsas 5, borrowing cost. Borrowing cost, that is the cost of borrowing, not borrowing itself. Cost of borrowing cost. Ipsas 6, consolidated financial statements and separate financial statements. Ipsas 7, investment in associate company. Ipsas 8, joint venture. Ipsas 9, revenue from exchange transaction. I will explain that later. Revenue from exchange transaction. Ipsas 10, hyperinflationary economy. Ipsas 11, construction contract. Ipsas 12, inventories. Ipsas 13, accounting for lease. Ipsas 14, information events after the reporting dates. Ipsas 15 has been abrogated, it's outlawed already. That is a financial statement, presentation and disclosure. Ipsas 16 is investment properties. Ipsas 17, PPE, properties, plants, and equipment. Ipsas 18, segment accounting. Ipsas 19, provisions, contingent asset, contingent liability. Ipsas 20, related party, information about the related party. Ipsas 21, empowerment, non-cash generating asset. Ipsas 22, Financial information about general government sector. General government sector. Ipsas 23, relationship with 9. That is revenue from non-exchange transaction. 9 is an exchange transaction. 23 is a non-exchange transaction. 24, information on budget. 25, employee benefits. 26, empowerment, cash generating assets. 27, agriculture. 28, 29, and 30, financial instrument. 27 is financial instrument presentation. 28 is financial instrument recognition and measurement. While 30 is financial instrument disclosure. 31 is intangible assets. 32, that is service. Service concession. This is the first set that was released by Ipsas board to commence Ipsas cash. Ipsas 1 to 32 was the first set to introduce, and that one was introduced in 2010, 2012 to kickstart Ipsas cash in 2014. In 2015, additional 6 were added to the existing 32, making 38 to kickstart Ipsas Accrua. And that gives us Ipsas 33 to 38, namely Ipsas 33, first time adoption. Ipsas 34, separate financial statements. Ipsas 35, consolidated financial statements. Ipsas 36, that is investment in associate company and joint venture. Ipsas 37, joint representation. Ipsas 38, disclosure of interest in other entities. Now, with this, we started Ipsas Accrua, and some other problems were surfacing. That was after 2016. So in 2018, additional 2 were added. Additional 2 were added. And what are they? Making 40 to the existing 38. And that, what are they? We have Ipsas 39 as Ipsas 39, not, I'm coming, please.
That's employee benefits.
Employee, thank you. We have Ipsas 39 as employee benefits. Employee benefit, that one talks about when you are retiring. Employee benefit. Then Ipsas 40, that is public sector combination. Public sector combination. Then, as time went on, another 4 was introduced in 2022. Another 4. We are now in 40. Another 4 were introduced in 2022, making 44 standards. And what are they? We have Ipsas 41, financial instrument reclassification. We have 42 social benefits. We have 43 as accounting for leaves. And we have 44 that says non-current asset held for sales. Non-current asset held for sales. That is 44. Then, as I'm telling you, just last year, another 5 were released, but not yet in operation. But not yet in operation. 2 will be operated as from January next year. And another 3 will be operated in January 2026. But be it as it may, for the purpose of our information, we have Ipsas 45 as PPE, properties, plant, and equipment, that talks about heritage and infrastructural assets. Heritage and infrastructural assets. We equally have Ipsas 46 as measurements. Measurements. We have Ipsas 48 as revenue from contracts. And we are having 48 as transfer expenses within one entity and the other. Transfer expenses 48. And the last one, 49, that is retirement benefit plan. Retirement benefit plan. So these are the Ipsas up to date. These are the Ipsas, the standards that we have up to today. But we are having a social draft up till 80 as of today. By tomorrow, I don't know, it may be more than 80. So out of this exposure draft, they will be releasing it to us. There is no need of talking about it since it has not been released. So let us talk briefly about each of these standards. I said Ipsas 1 is the one given to me per se is Ipsas 1 and Ipsas 2 and the rest, but we talk about them just like that because there is no Ipsas that can stand in isolation. No standard that can stand in isolation. One is linking to the other. So you cannot say that I have known this, there is no need of others. No, 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 no. One links with the other. So even from Ipsas 1 to 49 now, they link with each other. At least when you are preparing the financial statement, you remember the retirement benefit plan of your retirees. But when you pay pension and gratuity, how do you record it? It goes to the financial statement. So it's still part of the financial statement. Since it is part of the financial statement, we must talk round the whole 49 standard. I'm not wasting much of your time. Ipsas 1 is preparation of the financial statement. We are going to dwell in this place for some time. Preparation of financial statement. How do you prepare financial statement? First of all, how many standards are we expected to prepare? How many statements, rather, are we expected to prepare in the financial statement?
Mr. Hello, sir. While people are enjoying you, I just want us to pause maybe for like 2-3 minutes and seek from our audience if they have 1 or 2 questions so that it will be more interactive before we delve into the preparation of financial statement. Because when you are discussing preparation of financial statement, all those standard in module 1 and module 2, you will need to talk of them in the preparation.
Yes, I will.
Am I right?
Yes, I will talk about
so
that.
that's why, and it's going to be a longer time because of the case.
Let us listen to questions.
Yes, so far. Hello. Do we have any? Let me stop sharing first. Do you have anybody that want to ask one question or the other? Please mention your name and where you are joining from. So people can unmute or you raise up your hand, I will recognize you.
Hello, sir. Sorry, sir.
Hello, what's the name?
Hello,
please?
sir.
Hello, we can hear you.
The name is Alex. Alex Ezomo is my name.
Okay, where are
From
you
Benin
joining
City,
us from?
Edo State.
Edo State. Okay, thank you.
I'm joining from Benin City. Yes.
All right, that's fine.
My question is that I think our lecturer said so much about the challenges in, on the implementation of Ipsas, and as well as made mention of a lot that will make it difficult to be implemented. What is the way forward, since we know that these challenges are on ground? What is the way forward to ensure that we are in full compliance with Ipsas accrual? Thank you, sir.
Okay. Okay, any other
Hello.
question?
Hello, sir.
Hello, your name,
Hello, sir.
where you calling from, sir?
My name is Samson Abuka, a membership 029973. I'm calling from the United Kingdom.
Oh, wonderful.
Yes. My question is, are we going to get a soft copy of this presentation?
Yes, I've answered that question. There will be
Okay, I
soft
didn't see it.
copy. There are,
Okay.
yes. And
That's okay.
we are recording this session. You have the recording as well.
That's okay. Thank you very much.
All right. Yeah, any other one? I have Sofayo Adetoye say. Please unmute yourself and ask your question.
Thank you very much. My name is Toye Shofayo. I'm joining from Lagos.
Okay.
My question is, the lecturer, if I got him right, gave a kind of umbrella title to Ipsas 1 to 32 and Ipsas 33 to 38 and 39 to wherever
42.
it ended.
42.
Yes, the only one I got is 33 to 38, which he referred to as Ipsas accrual.
Okay.
I don't know what umbrella title he gave to Ipsas 1 to 32 and 39 to 40, whatever. So
okay.
I would like him to please mention that.
All
Secondly, you have told us that we'll get soft copies of the presentation.
Definitely.
What about the video
Yes, everything.
Get the voice recording.
Yes.
Okay, that would be lovely. Thank you very much. Well done, guys.
All right. I think we don't have any other people again. So, and if you have any, you can just put it on the chat box there so that we can attend to it. Mr. Lushola, please.
I am with you 100%.
And let's attend to these 3 comments.
And anyways, it's just comments, not
Question per se.
question per se.
Yeah.
The way forward. Yes. My brother, Mr. Alex from Benin, I enumerated the problem of Ipsas, the advantages, and the rest. The way forward is that there is no going back on Ipsas. The accounting, the financial statement of all tiers of government must be presented using Ipsas accrual as from today. During my presentation, I said, Ipsas accrual. I said that as of today, 28, today is the last working day in the month of June, because the Accountant General or the Treasurer of local government must submit to the Auditor General the financial statement of their government on or before 31st of March of every year to the Auditor General. And the Auditor General needs to work on this financial statement for additional 3 months, which is April to June. And as at 30th of June, the financial statements must be on internet. That is the dictates of Ipsas. So as at today now, today is the last working day. Although there is nothing that says the last working day. They just said that last day in June, which is 30th. But nobody will come to work tomorrow and next tomorrow. What am I saying? The way forward is that those people that are there, government must train and retrain. It is too expensive. Is one of the disadvantages. It's too expensive. And even for the preparation of the financial statement, is too voluminous. I told you that before I left office, my financial statement was about 800 pages. Because of the principle of disclosure, you must disclose everything. No more hidden agenda. You disclose all the source of transactions in writing. That is why I said the financial statement itself is self-explanatory. The moment there is a transaction, you tell everybody how and why of this transaction. And let me say this. It's just because Ipsas is all about presentation, measurement, and recognition. You present it, you measure it. It is then you have your figure. Then where do you present it? In the financial statement. Is it financial performance? Is it financial position? Is it cash flow? Is it comparison? And the rest, and so on and so forth. So the way forward is that we train ourselves. We must know these things. There is no going back. It is an international dictate. Other countries are preparing their accounts using Ipsas. Then there is no gainsaying the fact that Nigeria cannot prepare their own. Everybody must prepare their statement using Ipsas. Most especially in Nigeria, we must sit tight and know that there is no going back. Some people are still thinking that when we don't know it, government will take us back to the one that we are used to. Nobody will take you back. We are moving forward. We have left standardization. We are not going back to standardization again. We left standardization 20 years ago. We are not going back again. We are now under Ipsas, and we must continue with Ipsas. So it's going to be training and retraining. Training itself, it involves a lot of money. Like I sitting down here, I have moved around the country for training. I have moved around the country, training people on Ipsas. You know, this one now on Zoom, on Zoom is just like, okay, we just talk. But the one that we actually demonstrate how to do it, I must be there. So I moved around the country, teaching people how to do this thing. That the way forward is to train your people and ensure that in your own state, you start Ipsas. I said it, that most states, they still prepare their statement with cash basis. Cash basis of Ipsas is just like standardization of account. Since we are adapted to standardization, then we can prepare Ipsas cash. So they still prepare the account and render it on using Ipsas card. But no, it's Ipsas accrual. And remember, those people working at the private sector, they are not superior to you working at the private sector, at the public sector. We attended the same school. It's just because they got their own appointments to the private sector. And you are in the public sector, you have to prove yourself. So everybody must bottle up and ensure that you implement Ipsas on your desk.
All right. Thank
you. They have talked about soft copy, they will give it to you. You talk about title of other Ipsas. My brother, what I said was that to kickstart Ipsas, Ipsas 1 to 32 was released. That was what we used to commence Ipsas cash. And when we wanted to start Ipsas Akua, they gave us, somebody's calling. And when we wanted to start Ipsas Akua, they gave us additional 6. And since then, when any problem is noticed in the financial statement, they now look for additional Ipsas to suit the purpose. That one brings us to this 49 as of today. Not that it's for certain things. It's not that to any. We only have Ipsas cash, Ipsas Akura. No other one.
All right. Thank you so much. I
Yes,
think
even though we have a fiscal operation report is statistical operation of the financial statement and statistical analysis of the financial statement, not that it has any standard that backs it up.
okay. Thank you so much. I think you've exhausted and clear most grace area where people want more information. So on this note, I think we can go on to that financial statement presentation. Will you be able to share there, or I share from here? Or what do you want to?
Share from there, no problem.
All right, okay.
No problem. So, are you there?
Yes.
Presentation of financial statement. In a nutshell, how does a financial statement under Ipsas looks like? That is presentation of financial statement. What statements are expected to be prepared under Ipsas? What is going to be the arrangement? What is going to be the arrangement? We are having finance. The first thing is the financial position. It is being referred to as the financial position. That tells us the position of that entity as at that material time. It tells us the position of that entity as at that material time. We have financial performance. What is the performance of this entity? That is otherwise known as income and expenditure in the previous something. In the previous traditional method and standardization, income and expenditure. And we have cash flow statement as statement number 3. We have cash flow statements. Then we have statement of changes in net asset. We equally have changes in net assets for equity. I will tell you little about that. We equally have statement of comparison. Statement of comparison. So when you want to arrange the statement, the first one is financial position. The next is the performance. Next is cash flow. Next is comparison. Next is statement of changes in net asset stroke equity. That is brought about by Ipsas 14 and Ipsas 3. And the last one, notes to the financial statement. You may call it disclosure. You may call it disclosure. So we are having 6 statements to prepare. And how do we do it? First of all, statement of financial position. Let's take it one by one. As I said the other time, even there are some ingredients. Hello? Am I still talking?
Yes, you are following you.
There are some ingredients that falls under Ipsas and under note 6. Statement 6, note to the financial statement that we are going to use to prepare the financial statement. A typical one is the trial balance. Because without the trial balance, you cannot prepare the statement of financial position. Where are you going to get your figure? And what do you use to prepare your trial balance? The ledgers. We equally have cash analysis. All these are the notes to the financial statement. But let us first of all go to financial position. In our financial position, otherwise known as balance sheet. Otherwise known as balance sheet. A typical balance sheet is divided into 2. The asset side and the liability side. Although that is the traditional method, we are now using straight line. Don't forget. But let me explain it in a way that every one of us will understand. We have the asset side and the liability side. The asset side is divided into two. We have the current asset and the non-current asset. In those days, we used to call it fixed asset. There is no asset that is fixed again. Even you, the owner of the asset, you are not fixed. So how can your asset be fixed? So let's see the current asset. The number one there is cash and cash equivalent. Cash and cash equivalent, which is the cash balance of that entity as at 31st December of that year. The cash balance. And how do you derive that? It goes beyond just going to the bank and pick your balances. No. You prepare statement of bank reconciliation, which will form part of the notes to the financial statement. You are still going to prepare cash analysis. Cash analysis that will tell you the inflow and outflow of cash. Otherwise, it's quite different from cash flow, because there are some items that will not go to cash flow that can go into that. That one is being demonstrated on chalkboard. We cannot do that on Zoom. So what am I saying is that when you prepare your cash flow, you prepare your cash flow also. The balances of that cash flow, which is cash and cash equivalent as at 31st December, must be the same figure in the trial balance. It must be the same figure with the bank reconciliation statement. Everything must tally. That is before you can take it to financial position. Everything must speak the same dialect. It must tally. If the source document for the preparation of all these documents is the journal and the ledger, then they need to arrive at the same figure. Then you take it there. That is the cash and cash equivalent. Yes, we are having, you can have loan as a current asset. Loan, don't forget, we are talking about public sector. When we say, how can loan be an asset? Yes, it is an asset to government. For example, if an entity gives loan to its workers in a particular year, that loan in an entity, they give salary advance. Salary advance is for a period of 3 months. Probably they want to go for either Ileya or Christmas break, and the salary is not yet ready. You just give loan that will span to 3 months from December to February. Then you have to disclose. And not only that, that one becomes loan. To is loan, but to you is an asset. You can call it an advance, it's equally an asset. It's a loan. The portion of the loan due for payment for the current year is equally current asset. Don't forget, we have inventories. Inventories. The one we used to refer to as stock. This one is Ipsas 12. Inventories. You measure your inventories. You take the stock at the end of the year, and the value, you bring it in as an asset. The one expended becomes stationary in the financial performance. But the one still in stock becomes a current asset. We equally have receivables. We have receivables. Receivables, otherwise known as the one we used to call debtors, is part of the items under current assets. When you add all these together, you have total current assets. Then you have non-current assets. Non-current assets. You know, when I was talking about Ipsas 44, I said non-current asset held for sales. So it's from this place. We have non-current asset. PPE. PPE. So properties, plant, and equipment. You classified it. Before the figure is brought to this place, there must be an analysis where you take the depreciation. If there is an impairment, if there is a newly bought one, if there is anyone disposed during the year, you take all those ones into cognizance. When you dispose any, you put it into, hello?
Yes, we are following you.
Okay. When you dispose any one of them, so with this, we have PPE. Then we have investment property. Investment properties and PPE, we have them under Ipsas 16 and 17, and we equally have them under Ipsas 55. Now, investment property and PPE, they are the same. These are capital assets, physical assets that you can see with our eyes, but meant for investment. It is meant for investment. That is to say, it is a source of revenue to the entity. And the entity is not consuming more than 20% of the investment property. This is what I mean. If the entity is consuming more than 20% of the property, it is no longer investment property, but PPE. Because we have a situation where there will be a building, the government will be using it as part of it as office, and part of it as they rent it out or lease it out to people. What is the percentage? If it is not more than 20%, then we still regard this as investment property. But if it is more than
20%,
you disregard it.
It's PPE.
It's PPE. And let me say, you have to depreciate it. You can depreciate investment, any of these non-current assets. You depreciate it. You can impair it. You can asset this. You can dispose them. You can revalue. You can revalue them. Be it as it may. But don't forget, your principle, the accounting concept that you have chosen, the basic accounting concept, is it historical cost? If it is historical, you know, you have to leave it there using the book value. So we have the PPE, then we have the intangible assets. Everything that happens to PPE, investment property, can happen to intangible assets. These intangible assets When we continue to imagine, what is intangible asset doing in public sector? Is there any goodwill there? Is there any capital reserve? Is there any software? And I want to tell you, yes, we have. We have software. There is goodwill. Since there is acquisition in the public sector, don't forget the principle of acquisition. During the principle of acquisition, before you pay your consideration, you determine the cost plus the amount you want to pay. Which one is higher? That is where you determine the goodwill. So you can have goodwill. You can have software, because everything in the public sector is now computerized. The Ipsas we are talking about, we have software on Ipsas. So intangible assets, these are the assets that you don't normally see, but they bring value to the organization, to the entity. So, but we don't depreciate intangible assets. We only amortize it. It's amortization instead of depreciation. It's amortization. There is also preliminary expenses for as intangible assets. We have preliminary expenses for intangible assets also that can be deducted. We development cost is there. Development cost, and so on and so forth. So we equally have goodwill. We have intangible asset in the public sector. Also, as in the non-current assets, when you have long-time contracts, that is span is more than 1 year, the cost incurred is not yet PPE, but non-current assets. This is what I mean. We're having a road project. Every one of you listening to me as Nigerian, you will know the road from Abuja to Kene. Baba Obasanjo awarded that contract. They are still on the road up to today. Even the part being in use has been depreciated again. But yet, the road is yet to be completed. What do we say about that road? Is it PPE? It is not, because the contract has not yet been, we don't even know the amount of the contract again. Because I am of the opinion that the cost of that contract will have gone beyond the cost of the contract as at 1990 something that Baba Obasanjo awarded that contract. When you compare the cost today, so the road is still there. So if you can all imagine that, and we equally have some contract that will span between 3-4 years. So the cost incurred on such is equally a non-current asset. So when you add up, you are having total non-current. And under total non-current, you have total non-current plus total current, you are having total asset. You are having total asset. And you start with liabilities again. Just like assets, liabilities are divided into two. We have current liabilities and the non-current liability. Current liabilities and the non-current liabilities. The current liabilities, we have prepayments We have, prepayment is an asset. We have, what do you call it? Receivable and payable. We have payables. Payable is a liability, is a current liability. We have a loan also. We have short-term loan. Then we have unremitted deductions. Let me explain unremitted deduction. In those days, we used to call it deposit. That is to say, money owed in trust for organization within the entity. This is what I mean. It can be within, it can be outside. Even from the salary of the workers, they deduct payee, they deduct union, they deduct other loans and other deductions just like that. It is not almost immediately that these deductions are made, that remittances are being made to the appropriate quarters. So as at the time that they are still holding on to these remittances, it is not deposit, but unremitted deduction. That does not mean that deposit has been erased. Deposit is within one governmental organization to the other. How do I mean? Money held in trust for one government is known as deposit. But if it's within the government, another organization, and not other government, it is unremitted deduction. You deduct, for example, we have some deductions from contracts. That is the revenue being explained by Ipsas 47. Deduction from contracts. When you want to analyze this also, is unremitted deduction, that you are yet to remit it to the appropriate quarter. It has been deducted. It still is within your organization, but you are yet to remit it out. That is unremitted deduction. In the same manner, you have deposit, as I said. Deposit is money held in trust for another government. A state government may hold some money for local government. That is deposit. If it is redeemable within a year, then it is current asset. But if it is redeemable after a year, then it is non-current liabilities. So what we are having is that the current liabilities that we have, as I said, we have payables, we have loans, short-term loans, we have unremitted deductions, and we have deposits, and so on and so forth. Be it as it may, you will know it is easy and easier even to identify liability when you see it in the trial balance. I will talk briefly about the trial balance immediately after financial position. And again, we have non-current liabilities. You add everything together under current liability, you have the total current liabilities. Non-current liabilities. This one differs from one government to the other. But the one that is, we have the long-term loan by the DMO, the loan by the DMO, or deposit. These are the long-term liability. You add the long-term liability together, you have the total liability. You add, okay, you have total liability. You deduct total liabilities from total assets. You get the net asset of the entity, the net asset. Then with these, you can go to equity. Equity. What are the equity of government? The equity of the government is not much. We have the reserve. The reserve. When we get Ipsas 33, when we get to Ipsas 33, you will know more about reserve. We have reserve. We have a public fund. Directly release. You have direct release that is not income. Direct release for capital projects. You have it, and so on and so forth. When you add them together, minority interest and the rest, you have the total must tally with what you have of shares as net asset. The net asset is the net worth of the entity. And let me say this, that all these must be from the trial balance. All the figure must be from the trial balance. You cannot import any of this figure from anywhere to it. It must be from the trial balance. And let me equally add that we all know that trial balance is divided into two, the debit and the credit. There are some items that you must find at the debit side that can never go to the credit side. While we have some items that we have at the credit side that can never be at the debit side. At the debit side, we have the assets, either current or not current. We have the asset and the expenses. So the debit side is divided into two. The assets and the expenses. When we get to performance, I will mention some of the expenses at the public sector. Also, at the credit side of the trial balance is divided into three. Like I said, the income of the organization, the liabilities, either current or non-current, and the equities. As I said the other time, capital grant, capital release, capital grant is part of equity. So all this, the debit side is divided into two, assets and expenses. The credit side is divided into three, liabilities, income, and equities. When you know this, and your trial balance is balanced, the moment your trial balance is balanced, there is nothing stopping your account to balance under the act, except you don't concentrate on what you are doing. Because every figure into the account is being drawn from that trial balance. If there is no guru to the answer, you actually calculate and compute the trial balance, and it's balanced by its name, trial balance. The moment it's balanced, every other thing there must equally balance. So, my dear colleagues, what you have seen in your screen is a typical example of a trial balance. Be it as it may, if an item is in the credit side, you cannot take it to the asset of an entity. It can never be an asset. You see that an income or a liability. Treat it like that. Just treat it like that. But you, as an accountant, you know the items that should be posted to the debit side of the trial balance, and the items that should be posted to the credit side of the trial balance. You cannot mix them together. No. You cannot mix them together. The trial balance will not even, because don't forget the dual concept. To every debit entry, there must be a corresponding credit entry. Therefore, if you take that law into cognizance, your trial balance must definitely balance at the end of the day. And any other account that takes its source from that trial balance must equally balance. And let me tell you that trial balance is very, very important to all the statements. That is the source document for all the transactions of the entity. And we go to financial performance.
Okay, let me scroll it. You can go ahead. I will look for it.
Okay. As the name indicates, financial performance. The performance of that entity. The performance of that entity during that fiscal year. How do they perform? The other name for it is income and expenditure. That one is outdated. We now say financial performance. If you are performing, they will see it under your income. And out of this income, how many are you consuming under your expenses? And let me say that the income of government, the major source of income of government is this tax. So the major source of government revenue is divided into two, tax and non-tax. Ipsas 9 and Ipsas 23. Now, Ipsas 47 is just being introduced, but not yet in operation. So what we are going to talk about is Ipsas 9 and Ipsas 23. Ipsas 9 is revenue from exchange transaction. When we say there is an exchange, it means that this is a biro. Or let me say this is a phone. If I give you this phone and you give me your biro there, then there is an exchange. Or I give you this phone and you give me money in return, then there is an exchange. Be it as it may, we know that exchange of goods for goods is better. We are not into that. But we are into what is an exchange and otherwise, non-exchange. So revenue applicable to government as a result of exchange transaction is known as non-tax. It may be hiring of government properties. It may be payment of rents, and the rest. And when we say, like Ipsas 23, revenue from exchange non-exchange transaction. That is, I give you this phone, you are not giving me anything back in return. A typical example of that is taxation. You pay your tax, government is not giving you anything back in return. You may tell me, the government prepare road. Yes. Are you the only person passing through that road? Pipe-borne water, yes, good. If it is in your area. Are you the only person using it? When we say, I am the owner of this phone, I am giving you, as you have something back in return, that it will be for Adaramola only, not for everybody. That is when we say there is an exchange. But in a situation where I give you and you are saying you are doing things that every one of us will use, it is not for me only. It is not an exchange. So what am I saying is that in taxation, you pay your tax, government is not giving you anything back in return. That is taxation. And this is the major source of revenue of government. Up to today, is the major source of revenue of government. So, tax and non-tax. Tax and non-tax. You add it together. You get the total revenue. If there is any other revenue from government, like aid and grants, assuming that we are together now, I will ask question, what is the difference between aid and grant? But we are not together, all things being equal. Many of us, we mix things together. We mix it together. Some of us, what is aid? We call it grants. What is grants? We call it aid. Aid, grants, even from the grammatical meaning of aid. I'm not saying aid, so God forbid, we are not. Aid, A-I-D. The grammatical meaning of aid is just assistance. Assistance. I am rendering an assistance. It means you must put in an effort before I can render an assistance. You must put in an effort before I can render an assistance. Aid. I want to aid you. You know, nobody can say, I want to grant you. You will reject it. But I'm giving you a grant. I'm just talking about the grammatical meaning. Aid means that you must contribute. You have your own quota. I am giving you, you want to construct this building, probably because of the cholera in town now. Federal government wants to give us so amount of what other organization wants to give us so amount of money. We add so before you use it. Even if they are giving us vaccine, what is the cost of that vaccine? So is aid and grant. That one is aid on itself, but I must contribute. But the one given to me, that is why in aid, they will come and inspect. Are you spending this thing on what we ask you to spend it on? Most especially the multilateral organization. They will come back to inspect. Are you spending our money on what we say you should spend it on? If it is on agriculture, hope you have not diverted it to health or to politics or any other thing else. But under grants, you are giving once and for all. The way, like this cholera in town now, the WHO may say, this thing must not spread to the whole of Nigeria. If it spread to the whole of Nigeria, there is a likely tendency that it will go out of Nigeria to other African nations and from there to other continents. What do? Let's give them, let's aid Nigeria now. Let's stop Operation Stop Cholera in Nigeria. So they give us grants and they forget about it. The only thing they may come and supervise how it will be used. So aid is quite different from grants. So when you have your revenue, we now have our expenditure. The first expenditure to be recognized. You know, you are going to add up all the revenue, you have your total revenue. The first expenditure that you are going to recognize is salary and wages. Very, very important. Salary and wages. We all know salaries. And we know wages are being paid on daily basis. Salary are paid on monthly basis. It is only in Nigeria that they negotiate. We still negotiate for minimum wage. It's on daily basis. But when our own is being paid, it's on monthly basis. We miss you, but that is not for this purpose. What I'm saying is this: salary and wages. What is the figure? You put it there. Then we have social benefit and social contribution. Social benefit is Ipsas 42. But let me explain the two of them. They mean the same thing, but with different meaning. As I explained, investment properties and PPE the other time. Let me explain. Social benefit, social contribution, they mean the same thing. It's the same expenses. If that expense is for the benefit of the workers of the organization, it is social benefit. If it is for the benefit of the workers of the organization, it is social benefit. But if it is for the outsiders, it is social contribution. Let me cite an example. Let us assume that I have a son working in one of the ministries. He's equally Adaramola. I am an outsider here in Ondo State, but a retired man. I have my friend as the permanent secretary here. And probably I am celebrating the wedding of a daughter. My son, or that son, is being wedded. He presented the IV to the Oga. There. Oga, my wedding is so date. And probably they have what to give to some people. They will give it to him. And they give him 200,000 for that wedding. I also, because I'm a friend to the ministry, I equally give them invitation. My son is doing his wedding on so date. Oh, Mr. Adaramola is a good man here. Go and bring a file. They treat it and they give me 150, 100. They can even give me 250 or 500,000, depending on the relationship between me and the. Mine is not recorded because I'm not a staff. It's not stereotype. But that of my son, they have their own stereotype data that they use for such. So to my son, who is a staff of that ministry, is social benefit. I am an outsider. They are only contributing to my wedding, to the wedding of my son. Is a social contribution.
Hello, sir.
I am with you.
Yeah. Does the palliative given to the general masses could be termed as a social contribution?
It is social contribution.
All right. Thank you.
Social contribution. So, what are we saying? I think with that, with the question asked by our coordinator, it is explanatory enough for us to distinguish between social benefit and social contribution. It varies. And let me tell you this. If there is Grading of roads. You are only repairing the road now. Grading of roads, most especially to local government. They are repairing the road, but the chairman will want you to list it out as part of the assets, capital project that he did for the year. He's grading a capital project. What we mean by capital project is the project that we do that will last for more than 1 year. But you grade this year, you come back next year, you grade. And they are saying you should not write it off. What do you do to that? Just today in the newspaper now, if not 10 billion so, has been released for palliative. The amount may be much anyway. It depends on the situation of the country. So we are having social benefits. The one to benefit the staff of the organization. That is social benefit. The one to the outsider, you are only contributing. It is not your responsibility. I think that one is okay. Let's go to overhead. Overhead. This is the day-to-day running of the organization. Day-to-day running of the organization. Expenses on that is known as overhead cost. Is known as overhead cost. All this one, which were portioned, there should be a table of apportionment that will be part of disclosure. It will be part of the disclosure. The table of apportionment. How do you know that this one is an overhead? This one is a social benefit. This one is social contribution, and so on and so forth. It's salary and wages that are being determined. But even in those days, although it's no normal that common, in those days, we add some things to other salaries that are not salary, but it's no longer, nobody does that again. With this remitter and IPPS or whatever, it's no longer possible. So we have overhead costs for the day-to-day expenses of the day running of the organization. We equally have allowance. We have allowance. What is an allowance? This is the amount given to the staffers of the organization that are different from salary and that are not paid on monthly basis. But it can be yearly or even once in 4 years. A typical example of allowance is salaries. A typical example is leave bonus. You have leave bonus as an allowance. You have sovereign's allowance, furniture allowance that are given to the politicians and the permanent secretaries and the like. So these are allowance, not that overtime allowance. No. No overtime allowance. Traveling allowance. No, all those things. Your traveling allowance is an overhead. Your overtime allowance is an overhead. But leave bonus, furniture allowance, sovereign's allowance, and so on and so forth, they are classified under allowance. And they are paid either once in a year, once in 4 years, and not that it's being paid every month. No. We have depreciation. We all know what depreciation is. If we can get to PPE, and we explain further, we all know what depreciation is. We deduct it from our PPE. But let me tell you this. Even if I don't get to PPE, let me tell you this. under land and building. Land and building is PPE. All the ones we used to call fixed assets, they are all now PPE. Land and building, plant and machinery, all the rest. They are these. You can depreciate your land. You can depreciate building, but you don't depreciate land. There are three basic things that are very, very essential in depreciation. What are they? The cost of the asset, the lifespan, and the value. The value of the asset after the useful life. I mean, what do you call it? After the useful life. All these, they are very, very essential. And you will all agree with me that every other asset has these basic characteristics, but the land has no useful life. And useful life is very, very essential under depreciation. To this end, you don't depreciate land. We have equally impairment. Impairment is under Ipsas 21 and 26. We have impairment cash and impairment cash generating asset and impairment non-cash generating asset. If I can get to that, I will tell you much about that. Impairment is a sudden loss in the value of an asset. Sudden loss in the value of an asset. If they are, that is to say, that vehicle being in use, that is going on the road, the vehicle has its own useful life. It has its own useful life. It has its own value. The book value. If that vehicle is involved in an accident, we cannot regard it as scraps already. You take it to mechanic for repair. You take it to rewire and all sort of people like that to work on the vehicle. They will repair the vehicle before you can put it back on the road. You will all agree with me that the book value as at the time of the accident and the book value as at the time after the repair, the value cannot be the same. The difference between the two is known as impairment. So that impairment is being written off also just like depreciation. Also, we have amortization. As I said, amortization is for intangible assets. Intangible assets, we amortize it just like depreciation. Useful life, the cost of the asset, the useful life, and the scrap value. You must know it before you do all those things. So based on this, these are the basic expenses of public sector. When you add it together, you have the total expenses. You take it away from the income, you only have net surplus or deposit from the operation. From the operation. Why is it from the operation? Is that this thing is common every blessed day. But we still have some that are not common, that are extraordinary, that are not common. So this one also, if any, for example, there can be disposal of assets, there can be revaluation, there can be foreign exchange transaction. There can be gain or loss, even as a result of change in accounting policy, or foreign exchange transaction and the rest. So all these, they are as a result of what? As a result of extraordinary item that happens within the year. So if any one of them happens, that is to say, if there is revaluation, the valuation cannot be revaluation at loss. You cannot revalue and get loss. You are saying that this asset is already a scrap, but it's still in use. You want to revalue it, you cannot revalue it below the scrap value. So you revalue it above that value. So it's always revaluation gain. When you are saying, this building, no, the cost is becoming ridiculous. I can now say this building was built with just 100,000 naira. Let me go and revalue it. What is the cost of this building? Okay, this building will be about 120 million. So you cannot go beyond on the even if it is 100,000, that 100,000 must have been depreciated up to certain level. Let me revalue. So you are going to revalue up. You cannot revalue down. Therefore, revaluation, we always result in gain, revaluation gain. We also have disposal. We equally have disposal of fixed assets. Or you can even dispose intangible assets. When you dispose assets, you can dispose in loss or in gain. But you know, I just said in loss because in public sector, people are so funny. People are funny. A brand new vehicle purchased in about a brand new vehicle purchased about 2 years ago. I will now say it's scrap. Even though the book value is about 4 million, they will now sell it for me for 50,000 naira. That is, it is possible in public sector. It's not possible in the private sector. Although we are all Nigerians, it may be possible in the private sector. I've not worked there. So I'm not saying I cannot say it is not possible at all. But in the public sector, it's very common. So they dispose it off at scrap value, disposable value. So the disposal of asset can be in gain, can be in loss, be it as it may. We equally have that of intangible asset. You can also dispose it. It can be in loss. It can be in gain. So when the other time when we were we're under financial position, I said capital receipt, otherwise known as the capital receipt for the money is released for capital projects, for specific projects. For example, now if this they there must be a center for cholera. Federal government now release certain amount of money to construct another center purposely for that, not for any other thing. It's a capital release. It must be for that project. It's not going to our financial performance. It's going to financial position to directly under equity. It's going there under equity. Later, it may be written off to reserve. So you add it up, you equally add minority interest. Because public sector is having interest in some companies. They are having interest. That is why we're having Ipsas 6 as consolidated balance sheet. We are having Ipsas 34 as separate financial statement, and IPSAS certified as consolidated balance sheet. You consolidate the accounts of these people, and the one that is due to minority, you give to them. So when we do all this, you equally deduct all this, what you are going to have is net surplus or deficit for the period, for the year. Net surplus or deficit for the year. And that is the end of financial performance.
Thank you so much, sir.
Let's go.
Quickly, because of our time, I think the next one is the cash flow presentation. Am I right?
Yes. Yes.
So after that,
comparison.
Yeah.
Comparison
yes.
has no problem.
Yes.
I will just match, or let me just talk about comparison in the next 2 to 5 minutes.
Okay. Then we now talk about cash flow.
Yes. Yes. Then we talk about cash flow. And
thereafter, we will give room for people to ask questions and contribute, because I'm trying to work towards our Muslim brethren that will be going for Jumat, so that we give them time
by
around
1
or one quarter after 1. Then I
just
want
Friday.
Today is Friday. I just want to inform our audience that this material will be made available, okay, for everyone, including the recordings. However, we have about 6 case studies there, question and answer, of which Mr. Adamola is just picking them and relates them to the standard of each financial statement template. Okay, so maybe before time we go, you will just expand one of the questions, then see how they were actually solved here. But when you have it at your own convenience, of course, you can go through them. They are straightforward. I've worked on them before. They are straightforward, which can guide us. And if there's any gray area or any question, Mr. Daramola will be made, his contact will be made available for us, to contact him. So go ahead, sir.
Okay. We call it statement of comparison. That is to say, you want to compare. If you want to compare, there are 2 things. So for us to compare, we are having financial performance. The statement that are just this financial performance, we compare it with budget. What do? Each of these items, what is the budgetary allocation for them? You place it side by side. We are on accountant. Is it favorable or not favorable? What is the difference in figure? Favorable or not favorable? In everything, we human beings, we always look for the simplest one. You can do it in accounting form just like this. You get the same figure, but it's very difficult to, you are going to, it's very difficult. But what people normally do is that, so favorable, difference. So this one is minus. Anything in bracket is minus. When it is open, it's an addition.
I just muted everyone now. So, Mr. Damola, you can mute yourself and continue. Mr. Mustafa, I may need to remove the person now. Mr. Damola, you can continue, sir. Just unmute and continue. Okay. Hello, Mr. Damola. If you can hear me, just unmute your microphone and continue. I need to mute some people. That's why.
Okay, are you there?
Yes, I'm here now.
Yes. So what I'm saying is that from statutory allocation, we all know what statutory allocation is. Money released from Abuja on a monthly basis. So what is the budgetary allocation? The budgetary allocation. How much did you say you are expecting from federal allocation this year? How much did you release? Did you receive? You received 250. You budgeted for 320. The difference, 70. If it is revenue, is unfavorable. When what you receive is lesser than what you budgeted for, it is unfavorable and adverse. But under expenditure, if what you budget, if you are spending less, then it is favorable. For example, under salary and wages, you are saying, okay, this year my salary and wages should be 180. And the actual salary and wages for that year is 160. You are having 20 favorable. But if it is other way around, it is unfavorable. So you compare everything together. It is only attachable to financial performance. That is to say, statement of financial comparison is only comparing financial performance with budget, no other one. And this one is treated under Ipsas 24. So we can move to, because of our time, let's move to cash flow. Hello?
I'm trying to get this. We are going to cash flow now.
Let me, okay, I think you can hear me. If you can hear me, I can be talking.
Yes, you can hear you. Just go ahead.
Yes.
I will show it on the screen.
Okay. If it is on the screen, is that? No, move forward, move forward. You are going back.
Yeah, this is it. Okay. Yes, okay.
Statement of cash flow. Statement of cash flow is divided into three. Is the movement, let me just define it, movements of cash within the organization within a period of time. This statement of cash flow follows the principle of cash accounting, cash basis. That is to say, it will recognize it if you pay for last year item you are paying this year, it will recognize it as payment for this year. If you are paying for next year, this year, it will equally recognize it. It will equally recognize it as payment for this year. That is why cash flow is different from financial performance. Because under financial performance, it is accrual. It is only those things for this year. Last year for last year, this year for this year. What am I saying? Statement of cash flow takes into cognizance cash transactions within the organizations. We are having, is divided into three. Cash flow from operating activities, cash flow from investing activities, and cash flow from financing activities. Let us take it one by one. Cash flow from operating activities. From the word operating, that is from the operation, it takes into cognizance every item, both inflow and outflow to the organization within a year. I mean, within that year, that is everything that takes place in that organization within that year that has to do with the operation. That is operating activities, both income and expenditure, with the exception of capital. If it is capital, you take it to investing, because in capital, any capital release, you are investing it. It is investing. Then financing. All these operations, where do you get the money to finance it? Is it from loan? If it is from loan, how are you paying it back? So, operating activities, the day-to-day activities, the income of the organization, the statutory allocation, the tax, they are all from the operation. Even if it is grant, it is financing. If it is aid, you know, it is not an operation. You cannot be receiving it every year. It depends on the usage. It can be financing. It can be investing. So when we let us go to operating activities. Income and just income. You list income, statutory allocation, tax income, non-tax, and so on. That is the income. Then you list the expenses, just as we listed it under financial performance. What do we have? Financial performance, salary and wages, overhead, social benefit, social contribution, allowance, stationaries is part of it. Stationaries and what have you? All this, the income is known as cash inflow, and the expenditure is known as cash outflow. You compare the cash outflow with cash inflow. The difference is known as cash and cash equivalent from the operating activities. Then we go to investing. When you go to investing activities, is this mainly with capital projects? How do you get money? What are the capital release for this year? This is one of the reasons why you don't just recognize capital release as part of the income. Even though it's an income, you don't just recognize it as part of the income. You classify it under investing activities because it's an investment income. Is for a purpose. So what are the money being released for such? Then what are the expenditure? Is it even any income from disposal of assets is coming to that place? If it is disposal of any of the assets, it can be disposal of biological asset, PPE, intangible asset or whatever, even financial assets, financial instrument. If you dispose of any one of them, then the gain, the income is the income, not the gain. The income will come there. The expenses on it will come there. We come under expenditure. So when you have the income, that is the inflow from investing activities. Then the expenditure. How much of the capital release have you spent on that project? Then on investment properties and the rest. Then the difference you have is net cash flow from investing activities. That is number 2 now. From number 1, we are having net cash flow from operating activities. This one, we are having net cash flow from investing activities. Then number 3 is financing. How do you get the money? Is it loan? Is it loan that you use? If it is loan, how are you paying it back? Redemption of the loan. Then if it is loan, okay, so amount of was received as loan, you put it there. So amount have been paid back. The difference between the two is known as net cash flow from financing activities. We are only having 3 now. 3 net cash flow. Net cash flow from operating activities, net cash flow from investing activities, and net cash flow from financing activities. You add the 3 together, what you get is cash and cash equivalents from the operation. You put it down. Then there is cash and cash equivalent as at January 1. That is to say, your cash and cash equivalent in the financial position of the previous year. You bring it back. You add it to it. What we are going to have is cash and cash equivalent as at 31st December of that particular year. And that is the end of the cash flow.
Thank you so much. Thank you. Thank you. Before we entertain some question at this point, and after participants' contribution of question, then you just treat one of the case study and explain how it is done. We have about 6 of them that you have already prepared. So you choose anyone, we just run through it. So our wonderful audience, can we have, let me stop share now. Okay, I can still leave it. Do we have any contribution or any question at this point to what has been? Okay, is it Mr. Sofayo Adetoyese? Please unmute yourself and ask your question.
Thank you very much, coordinators and the honorable lecturer. My question is that, number 1, under the statement of financial position, you talked about non-current assets and current assets. A particular item under current assets called inventories. I want to ask, what is the basis of valuation of inventories under Ipsas? Is it also like we have under IFRS, which says that valuation should be based on lower of cost and the net realizable value? So that's my number 1 question. Number 2 is, under non-current assets, you equally made very, very good analysis and breakdown into the various components. You talked about depreciation and impairments. So you equally said that impairment applies to cases of sudden loss in value of an asset. So my question here is that, does impairment apply only to situations of sudden loss in value of assets? It doesn't apply when there is no sudden loss. Because I'm aware that in some other forms of organizations, what they do is they do depreciation on one hand, do impairment on another hand, and then the policy is that they should choose the one with the highest figure out of the two, and then the
Financial statement.
difference should go into reserves. So I would like you to kindly shed more light on this. Thank you.
right.
These are my two questions.
Thank you. Yeah, Mr. Sharafa Shonubi, please unmute and ask your question.
Good afternoon, sir.
Good afternoon. Where are you connecting from?
Hello. From Ikorodu.
Yes, we can
Lagos
hear
State.
you. Where are you connecting from?
From Lagos State, Ikorodu precisely.
All right, go ahead.
Yes, I want to ask a question about this. What are the items that we can classify as a social contribution and social benefit? I'm having some items like if we're having rehabilitation of roads, like a local government doing rehabilitation of roads within outside the probably premises, probably their PHC. Can we classify it as a social services contribution or their main core capital project? That is the question I just want to ask. Rehabilitation and restructuring, anything rehabilitation, restructuring, and renovation. That's my question, sir.
Thank you. Please mute yourself. Do we have any other one so that Mr. Adaramola can answer them together at once?
Yes. Yes.
Mr. Samson again?
Yes.
All right, go ahead.
Yeah, my question is under what our facilitator mentioned under investing activities. I couldn't get the point well there. He said that it is not all capital release that I will classify under investing activities. Can you explain that? Which other place can we place any? Because I couldn't get it well when he was explaining that we put capital release under investing activities.
Okay.
Is that there are other that it's not all capital release that we put under investing activities? Can you explain on that? The other place we can put it.
It will clarify that again.
Thank you.
All right. Any other one? Nobody? Okay, Mr. Olushola, you can go ahead, sir.
Thank you very much. I love it. All the questions. It shows that you people are paying attention. And I congratulate you. I congratulate myself for the responses from you. I just want to, let me start from Safara Dean at Lagos. The way he asked that question, probably he has attended one of my lectures before. I assume and presume that probably he's a local government man from Lagos. Rehabilitation of roads as social contribution. We just need to ask that question. The road that is being rehabilitated, who is the owner of the road? That is the first question. One thing is that this property is not mine. I'm rehabilitating it. Does it make it my own? I don't know whether what I'm saying is making sense. That road, we have three categories of road: trunk A road, trunk B road, and trunk C road.
Yes.
Trunk A are the road leading state capital with another state capital. This one at the trunk A road belongs to federal government. And we have trunk B road from one state capital, from one local government to the other, joining them together, belongs to the state government. Trunk C road, this is the road that are more, even in kilometer. The roads, adult road within the town, it belongs to the local government, including your, what do you call it, where you park your vehicle in front of your house.
Street road.
There is one type terminology being used. That's the space between the main road and your house.
Setback.
Yeah, setback. Thank you, my brother. That to park your vehicle, it belongs to local government. That is why, let me just tell you that because we cannot get to PPE. That is why, if government takes over your building, and what the only thing you have there is your fence, they will not pay anything. Because that place where you fence is government property. So what we are saying is that who is the owner of the road? If local government that you have just mentioned is the owner of the road, is rehabilitating his own road, then is repairing his road. That is repair of road. And that one is an overhead. You repair your own road. Your chairman or political office holder may regard this as capital project. Please, as an accountant, is it a capital project? You do it this year, you do it next year, you do it. But there are some repair that are capital in nature. What do I mean? For example, there is a rainstorm and the whole roof is blown off. When the whole roof is blown off, then you now, probably that one will now bring another major repair. The cost of the bringing it to life again may even be more than the initial cost of the building. Then we cannot cost that one. We cannot classify that one as an expense. You capitalize that expenditure. If it is your project, if you are the owner, if you are not, you cannot capitalize what is not your own. Accountant, let us reason within ourselves. You are a human being, I am a human being. You have your own house, I have my own house, but we are friends. Jolly friends, moving together, do things together. Something happens in your house. Probably either you are around or not. I now went to your house and repaired it on your behalf. Has that made that building my own? The answer is no. It's not mine. So if I do it like that, I just do it for my friend. I am contributing to the welfare of my friend, social contribution. But if it is my own, I am repairing my own. That one, it is not for the staff. You cannot call it social benefit. It's not for the staff. It's not for the staff. Even if the staff is the staff cannot be the only person passing through the road. We are talking about the road. You are only repairing, you are rehabilitating the road. You are only repairing the road, bringing back the road to usage for easy passage. Then, if it is state government road, you are contributing. But if it is your own road, the local road, then it is repair of road. I know, as I said, you may be from the local government. We drag issue like this. We even talk about purchase of, what do you call it, transformer. Sir, can you allow me to dwell on that a little bit? Purchase of transformer.
Briefly, sir.
Transformer by local government. They purchase transformer to their community. There was a question on that. They said they should classify that as part of their own asset. The question I asked them is this: who is the owner of transformer? Even before that one, that meter in your house, in your own house, your personal house, who is the owner?
Is the electricity provider.
The NEPA people, I don't know the name you call them now, so many names.
Electricity provider.
But we just know that they are NEPA. I know them as NEPA, very good name. That NEPA is the owner of that, and who paid for it, for that meter? I paid for it. Who is the owner? NEPA. Even I will use that meter until its useful life, that notwithstanding. Because they are using it to tax me every month. So it's not my property, it's theirs. I'm just contributing to NEPA affairs. So coming to, what do you call it? Transformer. Transformer, you are buying it, is not your property. It's not the property of your local government. It's property. It's boldly written here. This transformer belongs to electricity provider, NEPA or whatever. So how are you going to say it's part of your capital project? What does not belong to you? You want to classify it as your own. It's not done. We should reason within ourselves that because we are working at a place, that does not mean if your chairman wants it as, oh, I purchased 10 transformer this year. Well, let it be announced like that. But in accounting, it is not like that. It is not like that. How can I classify what does not belong to him as part of his achievement? It's not. So on social rehabilitation of the road, you must first of all tell us who is the owner of the road. Even if it is local government, good. Local government rehabilitate the road, repair of road. Repair of road, not social contribution, if it is local government road. So far, you have it.
Yes.
The basis of valuation under inventories. Yes, the one you have said is correct. That is what we use at the local, at the public sector. That is what we use at the basis of valuation. Then on empowerment, it's a sudden loss. What we have just said, that we human beings, most especially in the public sector, basically what we have just said, it reveals to me that you work in the public sector. At the public sector, we look for ways of window dressing the account. Tell me, my brother, how can you put side by side depreciation and empowerment when empowerment is sudden loss in the value of an asset? How do you get that figure? Okay, what parameter do you use to derive your own figure? What parameter do you use to derive that figure? How do you come about the figure in the first instance? I told you, it's a sudden loss in the value of an asset. I am sorry we cannot get to all this something one by one. Let me tell you, even if it is cash generating asset, it's as 26. What do you do? At the beginning of the year, you must have budgeted for the income from this asset. That, okay, let us take, for example, a vehicle. Ondo State is having a vehicle running from Ondo State to Abuja on a daily basis, bringing in income, and it's being used for that purpose only. If it's used for political something, it's no longer investment property.
Yeah.
It's no longer. So, but please, for the purpose of this, it's used purposely for that. Our government, they are funny anyway. Flying from Akure here, where I am now, to Abuja, to and fro. And the vehicle, incidentally, unfortunately, involved in an accident. The vehicle will be taken to the mechanic for repair. Initially, at the beginning of the year, they must have budgeted that this vehicle is bringing in 10,000 naira every blessed day. Is working 25 days in a month. 10,000 in 25 days, 250,000 in a month. Times 12 budget for that vehicle only. Now, the vehicle is involved in an accident. It's taken to the mechanic. You will agree with me that during the preparation of that budget, we are not saying that this vehicle we have hold up problem that will make the vehicle not to work for one day. We just say 10,000 times 25, or at worst times 20, times so and so. So we are budgeted for the income from that vehicle, and the vehicle is involved in an accident. We take it to mechanic. And it takes a period of 2 to 3 months to bring the vehicle back to the road. We have lost some income. How much? Even
750.
750,000.
Yeah.
We have lost some income of 750,000. And we repair the vehicle. The value of the vehicle before the accident and the value after the repair cannot be the same. The difference is impairment. The revenue loss, the 750 we are talking about, is equally impairment. That is the difference between impairment cash generator and impairment non-cash generation. So, but you just put depreciation and impairment side by side. Where do you get your own figure of depreciation? How do you come about it? It is just a fallacy and a means of window dressing government account to siphon government money. So, Mr. Sampson talked about capital release under investing activities. Said, oh, how do I classify it? Probably you don't listen to me very well. I'm saying that capital release is you invest it. If it is capital release, it's an investing activities. But if this capital release is from these agencies to do certain projects, it is no longer investing but financing. They are financing that project. You are an accountant, you can read meaning to it anyhow. They are just financing that project. After the project, they go away. But if there is a capital release for certain project, it's going to be under investing activities. Thank you very much for your questions.
Yeah, thank you so much. It's really interactive and really, you went to the deep. Thank you so much. At this junction, we will just treat one of the case study, a kind of illustration. We want to treat the one that will not last more than 15 minutes, because by 1:20 we must end this session. And I can excuse me, I'm assuring our participant that this material that contains about 6 illustrations and all these things will be made available. And tomorrow's session, which is module 4 and 5, part of this, what Mr. Adaramola has mentioned today, they will treat them one after the other, because some of them are components of the financial statement he mentioned about today, particularly the revenue stream and the expenditure stream, so that you understand it, in full detail. And Mr. Adaramola is much more used to practical something, just that we do not have a physical class. You'll have seen some of this demonstration and real life experience that he always share. So let me see from that something, the particular illustration we can share. And when I'm doing that, I may welcome if we can have other contribution or question from our audience. So the floor is open. You can just unmute yourself, tell us where you are calling from, then ask your question. Mr. Adaramola is much available to attend to them. So we can do that within the next 2 minutes. I'm looking for particular illustration that Mr. Adaramola will take us through. Just unmute yourself and ask your question. Okay?
Hello, good afternoon, sir.
Good afternoon.
I'm Olamide, sir.
Okay.
Concerning the illustration given by the presenter, please, I want to have a question concerning the valuation of assets. especially on that motor vehicle. How are we going to get the valuation of that motor vehicle after the accident? Do we need to, is it after evaluation? As we were talking about that the value after the accident compared to the value before the accident, that's the impairment. So will there be need for evaluation first? That's my question.
Okay.
Hello.
Okay,
Yes,
yes, it's hearing you.
thank you, sir.
Let's give another person opportunity as well. Any other one? Any other one? Let me just tell you, the value of Mr. Daramola when it comes to this Ipsas, particularly the time it was just being adopted in Nigeria some years back, even up till now, is a kind of person that they will just lodge somewhere in Abuja for weeks. most of these parastatal are even part of the knots just to take them through. So we are just being privileged to have him for this session again. That's why when we were debating who would be the person to put us through this webinar, we have no other choice than him. And I need to send some people to him that will he still be able to attend to us? Why? Because Baba is now retired. They say, hey, Baba is ready to do it anytime. So we are just privileged. Any other question from another person, please? So that we can. Yes, we provide Mr. Daramola's number for you. Don't worry. Okay. Okay, I have another person here, Mr. Adeniyi. Please ask your question, unmute yourself and ask your question. Mr. Adediran, you have the floor. Just unmute your.
Okay, thank you very much, Mr. Coordinator. Okay. I appreciate the paper presenter and all protocols duly observed. Well, I've so much enjoyed the presentation. It's just an appeal I want to make to the facilitator. If he can make the National Chart of Accounts available to us.
Okay.
That's just my request. Thank you.
Okay. Mr. Sofayo again.
Yes, thank you very much. My question once again is that in view of the slow implementation of Ipsas that we have experienced, as accurately mentioned by the Honorable Lecturer, is there a regulatory authority in the public sector that monitors implementation? And then is there a deadline, that has been put in place or likely to be put in place within which everybody must be compliant? I am actually not from the public sector. I'm from the banking sector. I've never worked in public sector. And I'm aware that in the financial sector, the CBN as the apex authority, has put in place a deadline within which all financial institutions must be fully compliant with implementation of IFRS. So do we have something similar to that in the public sector where you have a regulatory authority and then there's a deadline within which everybody must comply with the implementation of Ipsas? And if you fail the deadline, there's a sanction which will be applied. So do we have anything like that in place? Thank you.
Mr. Damola, go ahead to attend those two questions. I think people are satisfied.
Thank you. See, on valuation of assets, as I said, The question is still from empowerment. The question is from Mr. Ola, Mrs. Olamide. Also, yes. Let me talk briefly about valuation. As I said when I started this thing, it's one of the major problems of Ipsas. How do you value your assets? Because you value and revalue, which is on yearly basis, that you value. Like the vehicle involved in an accident, you repair, you need to value it. Then you need the services of the valuers. And when you involve them, you must pay them. And we all know we are all professionals. The professional bill they will give you, almost 10% of the asset. Almost 10% of the assets. Then the government may not even get it. Let us look at it and reason within ourselves. The vehicle that I said was flying Akure and Abuja, was involved in an accident. And after the repair, am I going to say, we just need to value this thing, or you cannot value it, the vehicle will not go back to the road? Won't they tag me as a man against the independent revenue of the state? That these accountants is opposing the revenue generation of the state. So, but you see, as Yoruba people will say, in all the states of the federation, in the Ministry of Works, even in the local governments, at the federal level, we have valuers as part of the staff. Just as we are accountants, we work at the public sector, we equally have accountants at the private sector. So I can say vividly that there's nothing those people can do that we cannot do. It's just because they are licensed to do their own job and they must do it. That is to say, they must audit our accounts. Now, if you are still waiting for government to do, government is not interested to give you that value. It's just a matter of inviting the valuers from this ministry to give, what is the value of this something now? It will give you. Let me tell you what I did in my state when to commence Ipsas. If I ask the state government to value all these assets, they will tell me, probably I will go and auction the state and sell it off to pay the auctioneer, because there is no how they can get even a year allocation of the local government not be sufficient to pay the valuers. So what do? They are not interested. And if they are not interested, it means that our account will not be in accrual basis. So what do? I went to each of these local government, they have valuers. And I sent letter to them as Secretary General. So are the list of assets of your local government. Can they give me the value? And they gave me that value, and I worked on it. That was how I got the value. The only thing that is giving us problem in Nigeria today is the roads. How do you value the roads? What are the values? It's because the government are not interested. Because even this, what do you call it? The organization you need to report to. The first thing is government. The government is the only organization that can measure, that can sanction them. And the government itself is not interested. Who will sanction them then? And you want to do your work. Mind you, when the time comes, for example now, if Ondo State is losing revenue as a result of non-preparation of accrual accounting in Ondo State, they won't call anybody. They will go, where is, go and call me the Auditor General. What are you doing? You are not you are not efficient. it is then that we will hearing a lot of grammar. They have forgotten the time that I've written some letters to them. They will not like to listen to me that I've written letters to them. All I need to do is to make use of what I have within my domain. And what did I do? I went to each, I wrote to them, and they gave me this one. So you make use of what you have. Like Yoruba people will say, make use of it. I'm sorry for my people that don't understand Yoruba. But what we are going to find in Sokoto is right in the pocket of your Sokoto. So what are you looking for? Make use of them at home and do this valuation. Don't wait for anybody. If you are waiting for them, you will not get anything. Because we are all Nigerians, we are all looking for money. Before you know it, the valuer, even in your own value, in your own ministry, will be looking for big money to do it for you. We know, you know the cost of what, even if that vehicle belongs to you, don't you know that the value is different? If it's your personal vehicle at home, don't you know that this vehicle is not as it used to be? There is a difference. You know now. So to get the difference will not be difficult. So that is it, my sister. We just need to use at times, we need to use our brain to do some things. If we relax, things will spoil beyond repair. And Mr. Okay, Solamide, Sarafa. Is it Sarafa? I mean, so fire. Also on the monitoring, yes. Monitoring, who are to monitor the implementation. We have some agencies that are monitoring it. As I said, we have the government itself. We have the central bank, which is equally the government. We have World Bank organization. I mean, the World Bank. All these, they monitor the preparation. But when they are coming, what is going to be the first place to touch? Government. So government is the big, and they know that they don't give you the necessary tools to function. So any question given to them, they are going to parry the question to some place or what. And that is public sector for you. And that is the major difference between public sector and private sector. In private sector, you are looking for results. But in public sector, everybody is relaxed. No problem. Can anybody wake up in the bank now and tell me you cannot balance your account in a day? It's not possible. You must balance it in a day. But in public sector, you may even leave it in a year. Nobody will punish you, and at the end of the year, you get your promotion. And if care is not taken, you will be given an award if you have some money in your pocket to buy some people. That is Nigeria for you. So all we need to do is, how do we do this job on our own so that we can gain value? Like our institute now, accuracy and integrity. We do it to time, and we maintain our integrity. So that although we have some monitoring group, but this group, notwithstanding, as I said the other time, today may be the last day now. Everybody will rush to submit. Some may not submit. They compensate people for submitting to time. In a particular year, you said $2 million. Not that person, no. To that state, $2 million. If it was that individual, you know, you cannot see me on screen having $2 million. Even if it is for one, you cannot get me again. I will have been somewhere enjoying my money. But what are we saying? Government is only interested in the moment government had that $2 million. Whatever you need to do it, they will give you. Go and do it. And so just go and do something. Submit it today. Go and do something like that. Even what you cannot do in 6 months. Go and do it within now and Sunday and put it on network, I mean on internet, and ensure that we get this $2 million. After they got the money, that is the end. They will even forget you that worked on it. You are not relevant again. How to spend the money will be the problem. It is then that they will remember that, oh, I have to do this in my constituency, as on and so forth. So we have some monitoring organization. They are doing their job, but they must submit to government, who is the major umbrella, and this account belongs to government, so they know what they are doing. Thank you very much. God bless you.
Thank you so much. Our time has fast been spent. What I will do, because I just scanned through all these 6 illustrations. They are very voluminous. I think what we will do is I will send it to every participant today. Then we'll go through it tomorrow, because we don't have much tomorrow, just two standard, so that if there's anything, they will contact you. I don't know if that would be fine because of time. This is almost 1:30 and we must close by 1:30.
I'll give them my contact.
Yes, I will.
My phone number, so that if they have any problem, they can call me on phone.
Yes, I will send them that case study, then provide your contact, so everybody can lay their hands upon it. So thank you so much, Mr. Olushola, as always. We really appreciate you. I will call on somebody. Do you have any district chairman within the Western Zone here? If there's any, please signify, so that you help us to appreciate Mr. Olushola Adaramola on behalf of the zone.
Ajibola is here.
Okay.
Icanoba district.
Oh, wonderful. That should be the zonal secretary, right? Hello.
Ajibola is here. Icanoba district.
You are the current chairman,
secretary.
right?
Zonal secretary.
That's what I'm saying. That should be. Please help us to
the
appreciate
current,
Mr.
Olushola. Oba district.
Yeah, I understand. Help us to appreciate Mr. Olushola Adaramola for the presentation.
Thank you very much, Mr. Moderator. You've been doing very well. To our able facilitator, we really enjoy it. In fact, I've had the privilege to be at Mr. Adaramola's lecture on more than 2 occasions when he came to Lagos. So he's a household name to us in the local government service of Lagos State over the years. He's a wonderful presenter, and I enjoy every aspect of the lecture. So I want to say big thank you so very much. And thank you for being there at all times. May God continue to bolden and enlarge your coast. God bless dearly. Thanks so very much.
All right. Thank you so much. Yeah, thank you for that wonderful appreciation to our Mr. Olushola Adaramola. Mr. Adaramola, we will always be needing you, like I told Peter. So please, we need you more than before, God bless you. God continue to enrich your knowledge and increase you on all sides. Who is sharing something here? Somebody is sharing something, I didn't allow anybody to share. So on these notes, we have come to the end of today's section, and I believe I would like to have people's comments, on the chat box, so that it can be useful for our further, analysis for us. Please make your comment here, or the email sent to you, make a comment so that we know where we stand and what you can do better. By tomorrow, by the grace of God, by this time when we are closing, we unfold, other plan we have for the year and subsequent one. So on behalf of every one of us at Active Option and the ICANN Western Zone. I really appreciate everyone that have been with us since the beginning and up to this moment. And we thank God also that He gave us, good time, no technical itch. Even at the time, there was light cut off when Mr. Darabola was presenting. But eventually, the light came over. Then maybe when Mr. Darabola was mentioning NEPA, the owner of the meter. But eventually, we have his restoration later. We thank God for that. So my other colleagues from Active Options, some of them, they are working at the back end to ensure that everybody is here this morning. I have to thank Mr. Samuel Ainde and Peter Akingbade. They are not here physically, with what I'm doing, but they are working on our, IT equipment facility at the back end. So I appreciate every one of you. By the grace of God, we meet tomorrow morning where we be treating the revenue aspect of the Ipsas and the expenses by our other presenter. So thank you so much. And we close now, we will recite the icon item, then the national anthem.
Bless God, icon fount of treasure, in triumph of banner raised, standing stronger in harmony, building a land together. Dreams of a founding fathers, we are striving to attain our counting values that we share through all ages be sustained. Institute of Chartered Accountants of Nigeria, noble icon, your accuracy we cherish. We uphold your integrity.
All right. The national anthem, just 1 minute. We are just getting familiar with it. Yeah. National anthem now.
Nigeria, we hail thee, our own dear native land. Though tribe and tongue may differ, in brotherhood we stand. Nigerians old and proud to serve our sovereign fatherland.
Thank you. See you tomorrow, and have a wonderful day. Bye-bye.
Thank you.
Bye, everyone. Thank you for joining.